Okay, welcome back. A couple more thoughts on today's market. We're up another 25 plus ES points here at 1190 area, midday, 10 o'clock. And a couple points I want to bring out depending on context and how you trade. This market now, if you go back to a 60-day chart, is very clearly in a bear market unless we are able to close over that 1260 level. And that's why I say it's pretty easy to sell rips in a market like this. Today, now that's the 60-day look. Now let's take a look at just going back the last 10 days where we've gone from a high of 1229 and a half down to 1135, or around 96, 97 points. Bottom line is we kind of the start to get short area, if you will, again, was kind of this first line of resistance here at 1182. We're sitting here at 1190, and the next area is 1193 to 95. There's a lot of resistance up in this level. This is really where we broke down last week on Friday. So we've come back to test this. Now here's what's going on. This is not a day trader's market, in my opinion. There's a lot of, quite simply today we opened at 78 and we've gone to 90. So it's a 12-point, 13-point range all day today. Not a big deal. Half of that was made overnight, so there's your mirrored move. You've got about 25 points today already in place. So here's where we are. We're approaching this 1192 area. We've got Obama talking tomorrow night, Thursday. The market volume is extremely light, as it always is the week post Labor Day. So it's shortened week. Today we're already halfway through that week. Tomorrow night we've got the jobs speech, which has been well telegraphed, I believe. It's been leaked, releaked, reworded. They're restructuring it just to get kind of reaction. Payroll tax, 2% cut for a small period of time, to me, does not stimulate the economy in the long run. There still is structural fundamental problems that have not been dealt with. Nothing new here. So big picture, as long as we don't close over 1260 for 2 or 3 days, you want to be bearish, selling up into that level. Now from a trading perspective, again, you're right, you're kind of getting into that sweet spot right now, that say 1185 to 1225 would be your first leg, and then your second leg would be somewhere in that 1250 to 1260 if you were staging into a position. Granted, 1250 from 1190 is only 60 points, or where we are, about 5%. I don't see much more upside in this market right now. I still believe we're going to get down into the 10s at some point this fall. Not necessarily trade here, but big picture, just context that you need to take a look at. So that's it as we go. Oil bouncing up here to 89. The dollar, by the way, did break out yesterday, and I'd watched this test of that 75 area, holding strong. Not a good sign for the larger, broader markets either. So keep that in mind in your big picture. We did break out on the dollar. Watching that 75 area test would probably be a good spot to buy if you're into the currencies. Euro may bounce here also, and that would probably be, as the dollar's falling, a good spot to put the short back on there. Listen, the contagion in Europe is nasty right now. I think the Greek bonds were trading somewhere around 88%. They're bankrupt. Thanks for stating the obvious. One of the Fed heads that came out and said that today. But we're getting near some problems. There's some serious, again, rioting going on in the European streets. And I'd just be careful. I wouldn't chase this market on the long side. I don't think you have much more than 1250, 1260 to the upside anyways. You're sitting here at 1190. So be prudent. Take some of your longs off. You've been trading them, and start to look at the dark side again. I think there still needs to be some work done a little bit lower here. Again, above 1260, I'm wrong, but that's where we are right now. Peace.